Everybody, we are back here on Thursday afternoon. We have about an hour, a little over an hour before the markets close. This will be the final market commentary of the week before we launch our long-form episode tomorrow with Matt Geiger. So I'm happy to close out the market analysis this week with Rob Sinn, CEO Technician. Rob, welcome to the podcast. How you been, my friend?
Thank you, Trevor. It's good to be back on the show, and I think you made a good decision. Matt is the guy for the long form. Matt's the guy who can talk for an hour straight. I'm more for the quick, here's a couple trade setups, here's my little take on some things.
There you go.
Little 15-minute, episode. I'm great, and I'm looking forward to football season.
Kickoffs tonight, my friend. I'm sure you'll be watching my Huskers take on the Squirrels of Minnesota. Hopefully we get a win. That'd be nice to kick off the season with a big W. Rob, let's talk about some markets here. In fact, I think we're going to talk about the state of junior mining because you did publish a nice long blog about some similarities you're seeing now with what you saw 5 years ago, 2018. And so maybe let's open this up a little bit for the listeners of Mining Stock Daily if they hadn't had a chance to read it. What are you seeing? What rings the ghosts of junior mining 2018? What is that right now?
The last few weeks I've had this thought in the back of my mind, this reminds me of another market period, and I kept tossing it around in my head. I'm like, no, it's 2018. It's 2018, summer 2018. I mean, here we are in August, the very end of August, but the summer of 2023 in many ways feels like the summer of 2018 in the junior mining sector. And what I mean by that is, the investor sentiment was through the floor summer of 2018. And actually by August of 2018, gold had dropped under $1,200 an ounce. So you can imagine under $1,200 an ounce. Gold miners were just flat on their ass, down big for the year. Nobody was really interested in the sector at all. But, a lot of companies were doing really good exploration work at that time. And even though the overall sector was very weak, the overall gold mining sector, silver sector was very weak in summer of 2018, a number of junior mining companies had big results that they put out during that time. And there were more than a handful of companies that had 10x runs at some point during 2018. And it kind of feels like what we have here today, where overall the sector is trading poorly. Overall, investors are sick of it. Extremely negative environment out there. Companies are canceling conference, attendance plans. The sentiment is terrible. But you have a number of companies, and again, more than a handful, that are at 52-week high or near 52-week high share prices that are putting out big results constantly. I mean, I could Fireweed, Snowline, there's a bunch of them. Some really good results out there. Obviously, we have the whole thing with Storm, Copper, and that, story in itself is very interesting and exciting, and it's made Bay go from 4 cents to 30 cents in a couple of weeks, right? So there are good stories out there in the sector, but it really is a stock picker's market. You can't just own everything.
Yeah. I mean, the market still is rewarding discoveries. We've seen that with Lavras Gold. And there was another one that's escaping my mind that came out a couple of weeks ago that had a nice good hit. And obviously, Founders. I think Founders Metals was the name of the company.
Founders Metals had a big hit, yeah.
Yeah. And so the market is paying attention here, Rob. It's just that willingness to deploy capital is very, very picky. What was it about 2008 that turned the tide here?
Well,
Excuse me, 2018.
2018. Yeah, 2018 was a wonderful time to be an investor with fresh powder to, accumulate stocks, right? And August of 2018, gold price bottomed at 1167. Over the next 24 months, gold went up to almost $2,100 an ounce, right? So a tremendous $900 an ounce run over 2 years, right? And there was a number of companies that were 10x, 20x, 30x from that August 2018 low. The bottom just kind of happened. It wasn't something when the gold price bottomed, you said, that's the bottom. No, we didn't know it was the bottom until 2 or 3 months later, and you're like, yeah, that was the bottom. And that's kind of how it always is. You don't really know when it happens. It doesn't tell you, yeah, this is the bottom and this is the time to buy everything. No. But the sector gradually moved higher throughout the rest of 2018, sideways for a long period of time. Went through another period in early 2019 of being out of favor. And then all of a sudden, in May, June 2019, the Fed said no more rate hikes. In fact, we're going to cut rates. And then obviously that was rocket fuel for the junior mining sector the summer of 2019. And obviously we know about 2020 and what the Fed did in 2020 and how good that was for the junior mining sector in 2020.
Yeah. What also happened in 2018, the summer of that, during that bear market, was Mining Stock Daily was launched, now that I think about it. What a time.
See? Yeah. So you started at the bottom of a bear market.
I did. And I didn't realize it at the time, to be honest with you. Hey, let's talk about, hypothetically, have we found a bottom in exploration equities here, Rob? And I want to ask you this because this has been a question of mine. I've asked previous guests for the last week, and as a technician, a guy that works on charts intricately, how far does technical analysis go in junior mining charts, specifically during periods of, as we mentioned, very low sentiment, very low volume, very quiet news? And from what I'm seeing, and again, I'm taking it as a grain of salt myself, but there's a number of charts, positions I own, other companies I'm looking at, where maybe I can make the argument that a bottoming process is forming on the chart. Tell me if I'm right. Tell me if I'm wrong. Do you see the same things or not?
Yeah, I think we are in a bottoming process. I think that's the fair way to say it. I'm not going to go out on a limb and say, yeah, we've definitely bottomed here as a sector. But there are a lot of signs starting to crop up that, okay, hold on, we might have something here. The only thing that kind of worries me a little bit about this recent bounce we've had off of the low of a couple weeks ago in the gold mining sector is it's been on pretty light volume. Now, maybe you could say, well, it's the end of August, so of course volume is going to be a bit lighter. Okay, fair enough, right? I don't think that the volume by itself is enough to say, yeah, this is definitely a bear market rally. We're going straight back down. But there are some signs, and there are definitely some signs of stocks that have just been really oversold. They've been sold down for months. And you're starting to see a volume climax at these recent lows and a move up off of those lows. And there's a number of stocks that are showing that this same sort of price action where, they're down, 30, 40, 50% for the year. They've just been beaten down day after day after day. And finally, it looks like there's a selling climax that's taking hold out there. Again, it's not enough for me to say, yeah, this is definitely it, but the signs are starting to mount that we are in a bottoming process here in the junior mining sector.
Is there a seasonality to this, Rob?
Yeah, there is a seasonality. I mean, usually August is a good month for the sector. I wouldn't say this has been a good month of August for the sector.
Right.
Despite the fact we've had this little bounce. In the juniors, the micro caps, there is a tendency after Labor Day to have a couple of good weeks. But I know then people are going to start talking about tax loss selling season now and how that's going to stop any rally right in its tracks, right? So this market has a lot of things to get through as it puts in the bottom here.
Okay. Let's talk about precious metals here. The last half of August has been pretty good for the metals and the prices of gold and silver here. But we're coming up to some resistance, and I had mentioned on Twitter that line at 1965 on the gold chart is just something that is implanted on my where I sit, and it's always interesting to see what happens here. We're coming back on a Thursday afternoon, and looks like we are trying to test that once again on a little bit of a pullback. Silver actually filled a little bit of a gap after jumping higher yesterday. But we also have non-farms payroll tomorrow. And whether you like it or not, everything is expecting Goldilocks. There's no reason to think that market traders and investors are going to act any differently. So who knows what happens tomorrow? But what is your general sense here on precious metals? I mean, it seems like some pretty positive momentum the last couple of weeks.
Yeah, I mean, first of all, the sentiment on gold has been very weak throughout the month of August. And even after this, $65 an ounce rally that we've had in the last couple of weeks, the sentiment out there is still pretty negative. I mean, this is far from positive, investor, outlook on gold here. In fact, many gold bulls, people who are gold investors, don't think this rally is for real, right? And it might not be, but the fact is that gold is above its 200-day moving average. It's in an uptrend on multiple time frames, and somehow it's trading up here above 1950. Despite all these negative things out there, including positive rates. Fed has raised from 0 to 5.5 on the Fed funds rate in just over 18 months. I mean, this is a serious tightening of monetary policy that's gone on. The dollar is stubbornly strong still, right? And gold is up here. It's trading well. So from a pure technician standpoint, I have to, respect the price action. And I do agree with you. Looking at the daily chart, there is a big area of overhead, supply right around here. I'd say 1975, maybe 1980, but we're right there. So we bumped up against it, and tomorrow's a big day. Yeah, it's non-farm payrolls day. I have no idea what the non-farm payrolls is going to be, but obviously for gold investors, we want it to be a low number, right?
Right. We saw the JOLTS data that was good for gold. Obviously, the weaker data for the general economy, obviously the better for gold. I just don't think we've gotten the all clear yet. We haven't had the all clear at all, although market expectations are the Fed's going to pause and it's going to quickly turn into pivot. We're not necessarily there yet. In fact, I'm almost wondering myself, Rob, I think a recession is going to happen. How deep, yet to be seen. But my internal question is, when does the Fed actually jump in to the rescue here, knowing that they want a recession to slow this economy down? I don't think they're going to just turn a blind eye the moment that the data comes by and confirms a recession. I think they might let this, simmer a little bit, to be honest with you.
Yeah, I mean, I agree with you. I don't think we're getting a rate cut, this year for sure, and maybe not even until March or April of next year. But here's what I will say. The Fed funds rate is at 5.5 right now. The Fed is still threatening the possibility of another rate hike at some point in the next few months. And gold is still trading at 1970. So what would happen if the Fed finally waved the white flag and said, no more hikes, now we're going to be contemplating when to cut. What would that do to the gold price that's already at 1970 with a dollar that has been stubbornly strong for most of this year? What would that do to the gold price?
That's a $50 day, Rob.
Yeah, probably.
At least. I mean, everybody's waiting.
Right. So what's the worst that could happen for gold? Like, let's paint the bearish thesis for gold. Let's say the non-farm payrolls comes in tomorrow at 225 or some strong number. Gold probably drops 30 or 35 bucks on that news. The Fed maybe starts talking about we've got one more rate hike, to go. Worst case, maybe gold gets sold back into the 1800s. If that's the worst case, because you got to say the Fed can't go much more. They might be able to go to 5.75. Maybe they could go to 6%, but there are no way they're going to go 6%, right? The worst case for gold is the Fed just stays here and doesn't cut. They just refuse. Like, we're not cutting even as the economy gets weaker, right? That's the worst case. But I think just from my gold bull bias standpoint, I feel like it's much more likely, a higher probability that the Fed is done right now. And we're going to be, maybe not next month, but maybe October, November, we're going to start having a conversation about, okay, when does the Fed, start to cut rates? Because they're too high, and the labor market has rebalanced.
Yeah. All right. Well, we will wait to see. Rob, head on a swivel tomorrow. Anything could happen, but it's going to be an interesting fall here, and maybe a happy Christmas for gold investors. We'll see.
Can we talk about one more thing?
Oh yeah, go ahead. Sorry.
Natural gas. All right. I just want to throw this out.
Yeah. I remember you mentioned you wanted to talk about natural gas. Something we don't typically talk about here on Mining Stock Daily, but you like it. You like it.
So the daily chart of natural gas has been putting in a rounding bottom all of 2023. Beautiful chart pattern bottom is forming. It's at $2.77 right now on the front month contract here. I feel like the downside risk is pretty modest. I mean, obviously, trading natural gas futures, you got to have a stop loss. But the downside is relatively modest, and the upside potential is pretty damn big. The $3 level, once that breaks out, a lot of upside ahead. And natural gas is going into a seasonal favorable period of the year. The next couple of months are very, very favorable for natural gas, and we're going to continue to see the natural gas price here in North America move up and get closer to the natural gas price in Europe over the next 12 to 18 months. It's going to happen. Three new LNG plants are coming online in the next year or so to bring the natural gas price up here in the U.S. So that's my bullish pitch for natural gas. I'm long natural gas.
All right. He's long natural gas, and Rob, thanks so much for your time. Appreciate it. Good talking to you. We'll see you in a couple weeks here in my state of Colorado. Safe travels when that happens.
Huskers.
Go Huskers. Thanks for that. All right, everybody. That's a wrap here this week. Long form tomorrow with Matt Geiger. Have yourself a great evening. Hope you watch the game. Wear red. Go Big Red. I'm really excited. All right. Have a good evening. Be well.